so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The bounce in stocks today. The president says he will not use force in Greenland. We will discuss and debate the best strategies right now with the investment committee. Joining me for the hour today, Joe Terranova, Shannon Saccocia, Stephen Weiss, and Malcolm Etheridge. We will check the markets. We are green. Yes, we are. We're off the best levels, though. So we've come back a little bit, but we definitely did move higher when the president said during his Davos speech, quote, "I won't use force in Greenland." I should remind everybody that in just about an hour, CNBC's Joe Kernan sits down with President Trump. You'll hear that later in the afternoon. And given what is happening on so many different fronts, it is such an incredible time to be able to sit down with the President of the United States as we are. This is exactly, though, Joe, I feel like what we discussed yesterday. The market's up, noise versus reality, bark versus bite, bluster versus actual policy. People are looking to buy the dips because they still see the larger environment, the one that the president spoke about, as being good for stocks.
Tactical opportunity, certainly for small caps, energy, healthcare, the areas of the market that have been performing so far year to date. We'll dig deeper into this later in the show. Software down once again in a tape that is moving higher. So there are still things to be concerned about. I still don't think we have the all clear as it relates to Treasury yields.
Which are down, which are,
one and a half
oil.
basis points for a 10-year. So 10-year got up to 4.3 yesterday. Was it 4.279? That's not really yields moving lower significantly. So yesterday there was tactical opportunity. You absolutely have to take advantage of a day when you're down greater than 1%. The market has subsequently rallied off of that. I think the areas of the market that you focus on tactically are what has been working. Don't bottom feed.
Okay. Welcome. Tony Pasquarello at Goldman Sachs has really had a knack for focusing on the fundamentals above everything else, in which his latest note, I think, goes there. He surveys the environment, not naive to the challenges, obviously, that exists, and says, quote, U.S. equities should be supported by a macro outlook that's inherently favorable, yet risk-reward remains tricky until we see better levels. In the doing, I suspect the tactics of navigation this year will favor the buying of dips, as distinct from the chasing of rips.
Yeah.
What do you think?
I think we're likely to get a lot more of these dips this year, right? We're heading toward a midterm election where we're probably going to see the president get a little more aggressive in making sure that he enacts the last few pieces of his political agenda before potentially Congress gets the balance in Congress gets upset. And so we're probably going to get a lot more of these like existential shocks over the 48-hour cycle like Shannon was talking about, which probably create a number of opportunities for investors who have been looking at specific names, not sectors or the entire market, but specific names that have been beaten down or thrown out with the entire bathwater. It gives you those buying opportunities throughout the entire year. But analyst expectations for earnings growth is 8%. This quarter we're coming into, and then double digits for the rest of this year. That underneath the surface tells me that we should have a pretty strong setup for stocks.
Let me just tease something out too. That in the next block of the show, Kathy Wood of ARK Invest is going to join us. She is out with her 2026 outlook and the biggest themes that she likes, and she's going to join us first on today and unveil that for all of you. And that's coming up soon. I want to make sure that we mention that. All right, Weiss. Pasquarello, equity should be supported by a macro outlook that's inherently favorable. Do I need to just rip up the sheet of all of the other stuff that's around and just focus on what he's talking about? Because that's what a lot of people are focused on, right? The backdrop.
Well, I said this last week. That's what everybody's saying. Whether you hear it's the best equity market I've ever seen for investing, because you got monetary policy coming our way, you've got pro-business initiatives coming out of Washington, and it seems like everybody's stacked up on one side of the boat, and that makes things kind of wobbly because nobody's on the other side. So whenever that happens to this degree, you can't find anybody that's negative. So I think that's going to your point, create ongoing volatility. Plus, my concern is that the absolute craziness, instability, looniness, whatever you want to say, coming out of D.C., may be pushing investors to their wits' end and saying, I can't deal with this volatility. So I'm just going to step back, I'm going to take it easy, and I'm going to wait for some real dips to buy.
I know, but the people who did that Liberation Day might have missed out on the back side of it, because every opportunity really over the last year, DeepSeek, that, and so many others have been buys.
Not only last year, the last 10 years.
For sure.
It's always been a V-shaped recovery. So the question is, so I've raised some cash, we'll talk about it later, and it's not a day like yesterday where I'm running to put it to work. It's a day when there's true, because that was nothing. Down 2.5 in the NASDAQ, painful to me, painful anybody who has money in the market, but that's not real pain. So look, so I'm waiting. I'm not raising cash a lot of places, only little cash, and I'm waiting for more of a sell-off, because I do think we're at the point where something real could happen.
Let's put it this way. Do you think, I don't ask this rhetorically, I promise.
Okay.
Do you think the president on the stage in Davos today would have made it clear to the world, essentially who he's speaking to, I will not use force in Greenland, okay, or we will not use force in Greenland. You think that was said today because of the market activity yesterday and the uneasiness in the bond market and rates going up?
Absolutely. And let me ask you a question. Do you think you can believe one thing he says? Or that he holds a position and maintains the position?
I think on something as serious as using force to take a territory,
I'll give you that, because I don't think it was ever a possibility. Right? I think that was just bluster, trying to get people to the table. My point is that you're going to see a lot more volatility. Volatility is not always going to be like yesterday, where you have a V-shaped recovery. It remains to be seen, by the way, if the averages, which continue to trade down, hold the gains, and whether yesterday was actually a good buying opportunity or not.
Do you think he wants the stock market to fall apart heading into the midterms? Do you think he wants the economy to fall apart? I know what you know the answers are. Which is kind of my point about the overall noise versus reality.
That's not the question. What I'm saying is that people are going to be less reliant on what he says, because everything changes. And that what's going to be more of a focus at this point is what are the permanent compounders that are going to help me get through this. And so to me, that's going to take down the valuations of some of the stocks that have been the ultimate high flyers and bring some sanity back in the market. I don't think it's a bad thing, by the way, but I'm just saying that he will come out if GDP was down 5%. He would come out and say, GDP is better than it's ever been. It's better than anywhere in the world. People are going to stop believing that line of garbage.
But I think the sanity is already coming back into the market. We've seen the rotation to small cap. We've seen the rotation to ex-US. We've seen the rotation to emerging markets. Some of the sanity around the high flyers that are specific AI enablement trades has already started to come off of the market. And so I think that in response, I do think that they're taking some of this news, they're determining how it impacts underlying companies. But I think more importantly, there is a sense that the underlying economic momentum has not only broadened the equity market, but it's also created a foundation where there is likely to be continued earnings growth. The other thing, Scott, is I think that, Steve, you sort of started to touch on this. The bond market, Joe mentioned this. I do think the Trump administration is worried about volatility in the bond market. That was really what created more of the impact, the negative impact to his platform last year in terms of things like affordability. I think long end of the curve volatility is something that the administration is certainly watching, regardless of day-to-day 2% declines in the S&P 500.
So talking about specific stocks, tech is rebounding today at least a bit. Not much. NASDAQ's not doing much again today. In fact, it's flat for the most part as we speak. And what was a pretty, decent looking rebound is all but dissipated, as you see on the chart right there. Tech's down 3.5% year to date. A lot of stuff on the mega caps today. You've got Amazon with their largest ever store. Wall Street Journal reporting that. Microsoft's target goes down to 620 from 640, reiterated outperform. Rothschild and Redburn, they cut Microsoft and Amazon and Oracle targets today. By the way, Oracle's down a bunch today, worth watching. A lot of talk about software, continued rough start of the year. Joe, you're watching this very closely. Orlando Bravo tells the FT that a huge buying opportunity exists within the software sell-off. Brad Gerstner said 2 weeks ago, now's the time to go sniffing in software.
I think everyone sees the same thing in software, just in terms of the names that I hold. Where am I seeing the best momentum? Obviously, I've been tactical in approaching trades with Twilio. Bought that yesterday. I think today I'm down a little bit on it, trading 119. Otherwise, Okta, cybersecurity, that appears as though it has a little bit of a bottoming formation. Datadog is another name that you could look at. But beyond that, in software, it is literally catching a falling knife right now. And the other side of that, right now, speculators and hedge funds that are playing that negative correlation trade between software and semi, they're getting paid on the semi side. They're getting paid owning their Applied Material, their Lam Research, the KLA Corps, and all of those semi names. So predicting when the mean reversion is ultimately going to show up, I am not able to do that. I don't think very many people are. If you have the ability to ride out what we're seeing in front of us right now, congratulations, but I don't know about going in there and buying falling knives in some of the names that just don't appear to have any bounce like Oracle.
So let's go there, Malcolm, because ServiceNow is pacing for its 6th straight down day. It hit a 52-week low yesterday. Joe owns the name. Maybe he's speaking directly about a stock that Malcolm just bought more of. Are you catching a falling knife? What's the deal here? Let's debate this.
Apparently so. I'm willing to go out on a limb and say this one's probably reached peak pessimism. I think the ServiceNow, it's down, 40%, I think, from its 1 year. Over the last year, it's also notched a new 52-week low. I think that this one probably starts to separate itself from the rest of the pack for a couple of reasons. One, the moat around it is that a lot of CTOs and CISOs are not going to be willing to introduce new AI startups that are supposedly going to disrupt the data space with these different companies that they've been building out in Silicon Valley the last couple of years. And then separately from that, ServiceNow's been questionable as relates to their valuation for a couple of years. It's the reason a lot of folks didn't want to touch it. But their earnings are growing, their free cash flow is growing, which means it's probably growing into its valuation and starting to look more attractive from a technical basis too. So to me, this looks like a great place to be building a position in this.
Okay. Now, by the way, I think it was Adam Parker yesterday on Closing Bell. We had this conversation about software and semis, that on both ends of that spectrum, and maybe we can show it as we usually do with the SMH versus the IGV. Chips versus software, the divergence that's happened, that it's starting to look a little extreme on both ends.
Oh, it's been extreme for the better part of the last 60 days.
Well, at some point, isn't that going to reverse?
But there's a very clear trade that is going on right now in the hedge fund community. And it's a negative correlation trade, and they're pressing the gas pedal on it and the direction towards semis. I don't disagree with anything that Malcolm's saying. He's looking at it from a fundamental perspective, and I think over the long term, Bill McDermott and the management team at ServiceNow, they will execute, they will recover. Their balance sheet is in great shape, agreed. Their revenue's growing at a rate that we look at as very appealing.
But it's 10x revenues in the last 10
absolutely,
years.
But you're looking at it through a lens that Steve is looking at me, and he knows. I just look at it through a different lens. I'm looking at it through the lens of momentum. And sometimes momentum may be a lagging indicator, but we'll probably, in this name at some point, step to the sidelines. And when the momentum reappears once again, it, without question, is one of the quality software names that you could own for sure.
You know, there was an article, I think it was in the Journal, that talked about how people with absolutely no training in coding are now able to build, through AI, their own software applications to be able to code.
Like vibe coding and all this other
so
stuff.
That's going to
But if you're the CTO of a Fortune 500 company, are you going to stake your entire career on that?
Well, I will tell you that the investment banks are, that they're building their own software applications, and I will tell you that lots of other companies are as well, where they're building their own software.
Look, not all software companies are going to be
and
losers.
That's true. But let me say this about Bravo. Orlando Bravo, brilliant firm, Tom and Bravo. But if you go to their website, it says the world's largest software investment firm. So they've got a bias. It's a natural bias, but I would say be careful of what you hear from people saying now's the time. Now, I think selectively
well,
you can
I mean,
buy,
they also do quite well. Like,
it's a great firm. It's a great firm. We've looked at some of their funds. You could say the same thing as Vista Equity Group with Robert Smith.
I mean, they're the two premier players within that space.
Right.
By the way, the great majority of software companies are private companies to begin with. If you look at the larger space anyway.
That's true basically every industry.
But they've been geniuses at identifying where the real value is within disrupted parts of that universe.
And I'm not being negative on them. You know, I respect them. We don't typically invest in large funds, but I've looked at some of their co-investment deals. I know the firm very well. They are excellent at what they do. All I'm saying is that take it with a grain of salt what they're saying. Now, we heard the same conversation a year ago. Now's the time to buy software because it was under pressure then. I'm not saying it's not, but I don't think you buy the whole group. I'm more in the Brad
Well, no one's
Gerstner.
suggesting that you buy the whole group.
I'm in the Brad
Cybersecurity
Gerstner
to me will bottom first.
Except, you know, I'm sticking with Microsoft. It's been a mistake for a year. It's done nothing. It's down. I'm sticking with it because it's still the operating system for most of the world's computers.
Let's move and talk about Netflix, too, which is, I really think it's an A-block story. 52-week low as we look at shares down more than 4.5% today. So you sold half of your position. Why now? Presumably, you're going to tell me because the stock is in no man's land until we figure out what happens with the deal, which was the case before the numbers hit.
So when something, and I thought about this quite a bit, obviously I missed the point to sell it, which was when they first got involved in this, right? And some others on the desk did it shortly thereafter.
Josh, I think, sold 85% of it the day the deal was, at least the offer, the day the initial offer was announced.
So I think it's important to be very open-minded as an investor. And I can either say I missed it, or I can say, okay, here's what the market's presenting to me now. What do I want to do now? Do I want to continue to bemoan the fact that I made a mistake not selling it later, or do I say, hey, I want to raise some cash because this stock maybe bounces to 90, but it's going to be stuck there for a while. So I'd rather raise cash now and keep that when I see a real market dump. So that's why I did. I did half of it. Maybe I'll do the other half. I don't know. But I still like it on a long-term basis. And I'm not happy they're buying it. As I said before, I'd rather have Paramount buy it and then get crushed under the debt load. And that way, you know, Netflix will be able to buy content cheaper. But with
you think Netflix wins if it loses this particular deal?
Yeah, I think they win if they win, and they win if they lose. They don't win by as great a margin if they buy this. I just don't know why they need it. You're paying $100 billion, close to $100 billion for an asset where you can put that directly into content, right? Instead of, and that's 5 years worth of content, according to what they're saying, of $20 billion a year, and be way ahead of the game. So, and then take out a competitor.
Assuming you can develop the kind of content that they think they're able to acquire through the transaction.
Right, which I have a record of. Right.
Netflix has a YouTube problem, right? They have to focus on developing original content in order to compete. The reason they got unseated by YouTube in the first place is because the appetite has shifted to original content. So 25% of all viewership of YouTube now is on actual TV sets. That's a problem for Netflix, and that's the problem they have to focus on solving. Buying a studio.
You can have more than one streaming company, and I think YouTube and Netflix you can both have, you know, but I just think Paramount's going to be crushed if they buy it.
All right. We have some moves to get to. You bought more XBI, Joe. That is one of your favorite early year trades.
Do more of what is working, and clearly in the fourth quarter, healthcare emerged. Beyond the XBI, two names to watch, ResMed, Insight. Those are both having really strong momentum. You've seen positions being built there.
You bought more of the OIH.
Yes, energy, both natural gas, crude oil. I think you're seeing a reversal in positioning, a very dramatic reversal in positioning from where the marketplace was short, comfortably short for the better part of 2025. Established a position in OIH, building upon it, Baker Hughes, Schlumberger, other names you can buy.
What do you think of what Cathie Wood had to say, particularly about the hyperscalers? The idea that the return on invested capital may be less and then less and less compared to what they're spending. And that is perhaps one of the reasons and main ones why she only has 1% positions in some of the hyperscalers?
I mean, I think that's realistic in terms of the amount of capital that's been put in place. I also think that it's about hyperscalers not necessarily being measured, Scott, on return on invested capital historically. So I think the challenge is going to be, and that's only going to materialize if you see that investment outside of technology. That's when you're going to get that ROIC, and that could be 2, 3, 4 years from now.
Yeah. What do you think of what you had to say?
I mean, the answer is we don't know, but what I can tell you, what I do know is nobody's going to Kathy Wood to invest in hyperscalers. They're going to her for find out the next generation.
No, I understand that, but
I think
that's like so what? Like,
I don't know what you mean by so what. I answered your question. I said she could be right.
I mean, if you're discrediting,
it's too early to tell.
are you trying to discredit her opinion on it?
Not at all. I'm just saying that she's smart. She's a business person. And she knows they're not coming to her to invest in that.
No, but
it's like Thoma Bravo's not buying manufacturing companies.
But she had a large position in NVIDIA.
Yeah.
She no longer does.
Right.
She only has 1% positions. I think I said in Amazon and Meta. I think was the other one. That's a statement. That's a statement from somebody who runs an innovation fund.
Exactly. And consistent with what I'm saying is that she was early to NVIDIA. And when it ran its, the path, then she got out. So she's looking for the next undiscovered names, and she said that names just aren't that well trafficked in. So
Malcolm.
That's why you go to her.
Malcolm.
For the market's sake, near term, I hope she's wrong, because this earnings season, profits of the Mag 7 are expected to grow about 20%. The other S&P 493, it's like a quarter of that, the expectation at least. So we do need those companies to deliver solid earnings the way they have been the last few years.
I'm not looking for innovation from the hyperscalers. I'm looking for cloud growth and from all the massive data in AI going to AWS and the others.
I get it. All right, finals are next. Let's do some final trades. Malcolm, what do you got?
I'm going IBM. Annually recurring revenues growing double digits. Earnings next week should be good.
All right. Mr. Weiss?
Alibaba, I think the momentum's returned to it, and they'll execute well.
Okay. Healthcare. Who's that?
That's
Shan?
That's me.
All right.
Specifically interested in healthcare, given some of the improvement in MLR expectations for the managed care companies and potentially some additional clarity around Medicare Advantage.
All right. And Joe Terranova.
Financial name, New Holdings. This is digital banking in Latin America, breaking out. We own in the ETF.
All right. So the market is trying to rally back. Yesterday, a bad day. The Dow right now is good for 0.5%, as you see. The S&P 500 did have 6,900 back. It's up about 0.5% as well. There is the Nasdaq above 23,000, and I'll see you at 3 o'clock.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It's Wednesday, January 21st. It's currently 5:52 p.m. Eastern Time, which means 10:52 p.m. where I am. It's very late as I'm recording this video. Doing it for you guys. So don't forget to hit the like, subscribe button. It really does help to keep this channel going. All right. Before we get started, let me just show you guys how the markets look. I mean, they were all up. As you can see, Dow was up 1.21%, NASDAQ up 1.18%, S&P 500 up 1.16%, Russell 2000 up 1.98%. In this video, here's what we're going to cover. Now, we saw some clips from the halftime report, and there was a number of stocks. So we're going to look at the index ETFs, like the Dow, the Russell, the FEZ, which is the Euro Stocks 50 ETF. We're also going to take a look at, we already looked at, I uploaded a video of Kathy Wood, okay, from the halftime report. That's a separate video earlier today. And there were about 16 stocks that you see here, that whole complete list. So I'm not going to go over any of those again, obviously. So yeah, consider checking out that video if you want to see my analysis on these specific stocks. In this video, we will cover the following right here, this whole list. And we will also take a look at some of our members' requests. There they are, 7 of them. And before we do that, let's take a quick look at the heat map and see how the individual stocks performed today. So let's get back to why. Why is the market so different today than it was yesterday? Because yesterday the market was tanking, obviously. Let's go back to the home here and let's take a look. Let's find out. All right. So S&P 500 rises 1.15%, turning positive for 2026, while NASDAQ 100 gains 1.35. Okay. Tech megacaps and semiconductor stocks lead gains, with Intel soaring 11% to a 4-year high. Energy, materials, small caps, natural gas, and gold sectors show notable strength. Market sentiment improves after Trump drops his threatened Europe tariffs and outlines U.S. NATO framework deal. That's a surprise. Not really. Early earnings reports from United Airlines, J&J, and Schwab contribute to positive tone amid the light economic data. So you can see here, this market is not broken down. We had about 61% of stocks are above the 50-day moving average. We've got about 57.2% of them are above the 200-day moving average. 74% are experiencing new highs. 68% were advancing today versus 27.9% declining. So the sentiment is also very bullish here. You can see the 60% versus 40%. Interesting. Let's take a look at the groups very quickly. Energy, the leader today, up 2.31%, followed by industrials, consumer cyclical, healthcare, and communication services. Basically, all sectors were up. For the week, it's been energy and basic materials at the top, okay, followed by industrials and real estate and consumer defensives. All right, now let's go ahead and get into those stocks very quickly. We're going to first start off with the indices, which is very important. The Dow Jones. If you're unfamiliar with this indicator that you're looking at here, it's called the Ichimoku indicator. Check out my prior video that I just uploaded earlier today with Kathy Wood. I go into a quick synopsis of how to understand what it means. But essentially what we're looking for is for price to be above these moving averages, the Ichimoku cloud, and Chiku span here to be above price. Dow Jones shows all of that happening here. Strong uptrend on the weekly chart. Here it is on the daily as well. So yesterday you can see that gap down. Price got into Kijinsen. It was very short-lived. Again, this is a news is what impacts price. And if things start to turn more bullish based on the news, right? A change in mind by the president, in this case, price moves back up again. So there's a little fake out, okay? And I'm sure there's a lot of profit taking place behind closed doors. I'm sure of it. Up 1.22%, okay, right there for the Dow. How about the Russell 2000, the IWM, up 1.98%? Look at that. Very nice. Again, like as I mentioned yesterday, even though we did drop, like the Russell was still looking quite strong, right? It held above the Tenkan-sen, above the Kijinsen. It's not like it was a major breakdown, but the news can sometimes make things look a lot worse than they actually are. And that's why it's so important to learn about how to read charts, because the charts will be able to give you a little bit more in-depth analysis of what's happening with the psychology of the traders, right? Are there more buyers than sellers? Okay, versus and that's essentially what we can derive by looking at these charts and understanding how to use technical analysis in conjunction with, right, the fundamentals. Right. So you also want to look, for example, let's take a look at Micron for a moment. You want to be able to look at these, right? The profit margins. You want to look at the sales growth rate, operating cash flows, all those things. They contribute, of course. But does it also not make sense to enter positions when price is, into strength versus, because the reality of the situation is sometimes stocks are not in these nice, strong uptrends, right? Sometimes they're in declines. Like back here they were, okay, Micron had dropped approximately 36% in 8 days there. Over here we've got into the moving averages. It had dropped about 7.5% in 23 days. Over here from this high to that low right there, if we measure that, there's a 26% drop in 4 days. Technical analysis can help identify those weak moments, but also identify the strength when we come out of those weak moments, and then we have a higher probability trade as a result. So anyway, let's keep going here. So here's the Russell 2000. I like it. FEZ, the Euro stocks, which was looking quite bearish earlier in the day, right? It was. Price basically had dropped below the yesterday's low for a little bit. And then it just started getting bought up. And so that's what that candle represents. It's a bullish engulfing pattern right there. And it basically engulfed the tiny little red candle there, the spinning top. If we look at the 5-minute chart, we can see all that action taking place here. So Here we are on the 21st. Okay, price moved up, it dropped. So it was starting to look quite bearish around 12:15 p.m. Up until maybe 2:20 p.m. And then, of course, look at that big candle there. So all the buying started happening at exactly 2:30 p.m. What contributed to all of that? I mean, one of the things you can do, all right, to try to identify, well, what happened at that particular moment, we can go into like something like FinViz, for example, and I can go to the news and I can take a look, see how it shows the news by time. I can go to 2:30 p.m. and let's see if we can find some info here that might have caused it. Let's see. We just got to move up a little bit. That's not a good one. Stock surge on Trump's claim of deal on Greenland. Markets wrap. So that happened around 2:48 p.m. And as a result, you saw how price popped. All right. So maybe that was it's these little moments throughout the day that helped things jump. Here's another one. Stock jump as Trump walks back Europe tariff threat. You know, it's basically this is the world we're living in right now. Trump signals he has a favorite for Fed share down to maybe 1 in my mind. He says, okay. All right. So anyway, you get the gist of it. Now let's that's what led that pop up right there. Okay, S&P 500. Basically something very similar, right? Around the same time, you see this SPY also popping here. That's the 5-minute chart. Here's the daily chart. Now, yesterday we had stalled. I mentioned how price had stalled at the cloud, and a lot of times when price comes right to the cloud, it will stall right there and then wait for more information before breaking it. Okay, and then as you can see here, we gapped up this morning, and then the buying started happening. Now, what we didn't accomplish was closing above the 9 period, that green line there. But this is still a relatively bullish move. So it was up 1.15%. We'll see if it can continue tomorrow. The QQQ ETF also did not make it above the Tenkan-sen today. That's why it doesn't have a blue flag here, both of these ETFs. But it was more bullish, obviously, because it did basically gap back into the cloud, broke above the cloud, and now we may see a continuation here. Fingers crossed. Here's the VIX. Remember yesterday I said we can't see the VIX popping above the cloud here because if we do, there's a higher likelihood that the market's going to drop significantly more. The opposite happened. The VIX dropped 15.88%. This represents volatility and fear in the markets. So when this is dropping, the market's moving up. So we do want this to be dropping, and that's exactly what happened today. Price even closed under the Tenkan-sen and Kijun-sen and back under the 200. So that's good. That's a good sign. We're back at a level of 16.9, at least for the time being. Next. Now, we already talked about these in the prior video, the Kathy Wood video. So let's take a look at the stocks that the gang from the halftime report, like Steve Weiss and Joe T. and the other guests that were there, Malcolm and Shannon, the stocks that they were talking about. And actually, I did review all of them, all 15 of them. And the ones that are at the top here have a blue flag. These are the ones I would say are technically sound and certainly something I would consider because of the fact that they look strong technically on the charts. And again, all we're looking for, it's very simple, folks. Once you understand how this indicator works, we want price above the moving averages, which is exactly what happened today. It got back above, up 1.79%. That's the IYH, the Healthcare Sector Index Fund. It was looking pretty gloomy here. It was dropping multiple days. If you look, we can even draw a little trend line there. Boom, bang. It actually broke right through that level and got back above the moving averages. So I think we may see a continuation here now with the healthcare stocks. And this is more defensive sector too. So that's a higher probability trade, in my opinion, versus technology, which has been struggling a lot more. NU Holdings Limited also looks good, popping above the Tenkan-sen. By the way, I've reviewed all these on the daily and weekly. So if it has a blue flag, it means that the weekly chart also looks bullish. Okay, there's NU as well. New Holdings Limited, Banks Regional. Let's see. Okay, just wanted to make sure. I was looking at MU. I didn't want to do the analysis twice. So NU, New Holdings Limited, and then you have OIH, which is VanEck Vectors Oil Service ETF. Here it is on the weekly chart. Okay, above the 200, above the Tenkan-sen, above the Kijun-sen, above the cloud itself, and the cloud is bullish. We've got Senkospan A, the light colored blue line above Senkospan B. That positive crossover took place right there. This is all positive stuff that we see here with OIH. I like it on the weekly and on the daily chart also. Check it out. It just broke through this little consolidation stage right here. Boom. SMH looks good. So yesterday, it actually just barely looks like it closed under, by a few pennies under the Tenkan-sen right there. And then we had a reversal today. So here on the 5-minute, you can see the gap up that occurred right there on the 21st from yesterday after that decline. It pulled back. I'm sure that a lot of people were like thinking, uh-oh, is this going to be like a little, is this how far further, how much further will this go? But it came close to the cloud, found support, stayed in it, and then broke right through it and then continued on. So now on the 5-minute, we have a higher high and a higher low, okay? This low is higher than the prior one. So that's good. And there's the daily. Here's the weekly. A nice continuation for the semiconductor ETF, SMH. XBI, biotech ETF, also looking good here. I like what I'm seeing here. I like the fact that today, you can see, let me show you the daily chart, for example. If you look closely, we haven't actually closed, okay? We haven't actually closed. If you draw that trend line right there, we haven't closed above any of these levels. So we took out the close there. What we haven't done is taken out this high of 129.12. That might be the thing to watch. Let's go ahead and throw that in there. 129.12. But overall, the fact that we're still moving back up again, I like what I see with the directional movement index, and the weekly chart looks very bullish. If we can break above 129.12 on a weekly, that would be, I think, a much stronger, more evidence that this thing is going to continue to the upside. All right, now the rest of these guys, I would not recommend, and the reason is because there's something off technically with Ichimoku, and for me, that's a deal breaker. Amazon right now on the weekly chart is under the Tenkan-sen Kijun-sen, so I would not be adding a position there based on that. Remember, I'm also looking at both weekly and daily charts, and it just takes one of those time frames to be, messed up, and I skip it altogether. There's no reason to give it the second time of day, like even a second glance. So Amazon under the cloud on the daily. Here's Alibaba, which has been showing some strength recently. You can see it entered the cloud and it moved up a little bit, 3.87%, but the cloud itself, it's flat right there. Prices inside the cloud on the daily. Tenkan-sen and Kijun-sen are at the exact same level. Okay, you can see that right there. And on the weekly chart, it does look more bullish, doesn't it? So we recently, like last week, for example, on January 16th, it popped above the Tenkan-sen, and it's looking pretty bullish. The 200-day moving average is actually starting to move up too. If you throw like a flat line right there at the bottom of this, let me go ahead and show you what I mean by that. There's the 200. Okay, notice how the 200 is sloping upwards now all of a sudden. So that is a good sign for Alibaba on the weekly. On the daily, looks like it's about to break through. Hasn't done it yet, though. D-Dog. D-Dog looking good. D-Dog looking pretty good here. Let's see. Let me just draw a trend line. I'm just kind of curious. Yeah, I mean, it's still under that level. Today, it popped up a little bit, up 5.52%. It's under the cloud. It's under the moving averages on the daily chart. Here's the weekly chart. Okay, finding some support around the 200, but still under the cloud, so I'd skip it, obviously. Hence why it doesn't have a blue flag. IBM was up 2.12. Here's the weekly. It's under the Tenkan-sen, and on the daily chart, we're inside the cloud, so no on that one. IGV, software index, is under the cloud and still dropping. No thanks, right? That's the software index fund ETF. And here's the weekly chart inside the cloud. It might find some support right there, but no reason to jump in here. Meta is still inside the cloud on the weekly, and on the daily chart, we're under, so no on that one. Netflix is also under. Ooh, now isn't this interesting, folks? I think it is. I'll tell you what I'm talking about. That level, that 8211 level that I talked about yesterday. Just check out what that little, when I hover over it, okay? Actually, it was 2 days ago that I actually drew that level on January 19th. You can see it created 01/09/2026. Okay. And why? I said, where do I think Netflix may stall? Is that level right there. It's that prior low. Okay. The low from April 7th, 2025, which was $82.11. Now, isn't it interesting that it actually came right to it? You can see that right there. And then started getting bought up. Okay. Here's the 5-minute chart to show you even more clearly. Look at that. It pierced it just by a couple of pennies. And I mean, it opened up above it, right? Right there. It came down, probably took out some stops right there or under that opening price, and then just started moving up. So I think Netflix has some potential here. I wouldn't be, let's put it this way. Now, I'm not suggesting that people should go out and buy Netflix right now. And the reason I say that is because it's still under the cloud. It's not, in the cards for me to be buying Netflix here because it's still under the cloud on the daily. And if you look at the weekly chart, same thing. Everything looks pretty bearish. But those weekly levels, okay, are significant nonetheless. Look at that. So it's not just this low, but it's also this low from January 17th of 2025. And then again, like I said, April 11th, 2025. Okay. So that's where we're at. This has potential. So what would I say? If someone has a position in Netflix, it wouldn't make any sense to be closing your position here. Okay. Like our friend Steve Weiss. Okay. If he studied technical analysis, he would know that, hey, you know what? We're coming up to a support level. Maybe I'll hold off on closing out my entire position. He took out half of his position in Netflix, and he's even considering taking out the other half. I'd say give it an opportunity here because now it's starting to show a little bit of strength after it made that little gap down, okay? And so, yeah, and you want to wait and see. Now, if it breaks back under 82.11, all bets are off, obviously. Okay, then Netflix is in even more trouble. I just don't see that happening, though. This is a strong company. Profit margins are up 24%. Capitalization is $370.8 billion. And I think it's been punished enough for the decisions that they've been making. So this might be the point. Let me go ahead and circle it. We'll come back to this tomorrow or the next day or whatever. And hold on, that one disappeared. Let's make sure it stays this time, okay? Let's circle it. There we go. And we'll be watching that level, 82.11. Let's go ahead and throw that right there. And so that's really critical, guys. All right, let's keep going. Isn't this fun? It is for me. It's not for everybody. I get it. I totally get it. But if you can make money by understanding how the charts work, and there is an art to it, and you'll have higher probability trades when you do learn how to use it. And that's why I strongly recommend that you guys try out this software here. It's called TC2000. You can actually try it out for free with a $25 coupon. Let me just show you real quick how you can get access to that. You basically go to my channel here, Blue Cloud Trading, where you can subscribe and hit the join button to get access to my members only videos by becoming a Blue Cloud Trader or Blue Cloud Legend level member. But let's say that you want to get access to the software itself. Click here, 9 more links. All right, now this will pop up, but just scroll down a little bit. And this is where you'll find these links. Lots of them, too many maybe. But this is the third one down, is a $25 coupon for TC2000 software. Click on the link. Oh, hold on, my bad. I don't know why that happened. Give me a second. I think I just have to click this, go to site. There we go. Okay. It popped up. Okay, so this is what it will look like. It's the tc2000.com/download/blue cloud trading. All right. That's the link right there. And once you're there, you enter your email here. You click the download TC2000 for Windows. Over here, you click a little check mark. Yes, I would like to receive email relating to TC2000 products. You will receive a $25 coupon towards your TC2000 service, courtesy of Blue Cloud Trading. Please note your email will be shared with Blue Cloud Trading. To be eligible for the coupon, you must not have used TC2000 service in the last 12 months. They also have a brokerage service. So if you want to trade off the charts, you can do that with Blue Cloud Trading. And when you do, if you do a certain amount of trades per month, you get the software, you'll get a $25 coupon every month, okay? So, and here's the pricing information, software plans and data. Click on monthly, and there you have it, basic, premium, premium plus. Now this one is the free. This is where you can have it for free for a month since it's $24.99 if you haven't used it before. I would recommend premium though. It has a lot more features. You'll be able to do the real-time scanning and sorting, chart drawing tools, easy scan wizard, that's a good one. You can create alerts, up to 100 alerts, customizable alerts, and get emails when price hits certain levels. I think that's important. And then you can act on it. So let's get back to the charts. And how would you do like an alert, for example? Let's say that, I'll give you an example of what I mean by that real quick. Let's go back to Netflix. Let's do a hypothetical here. I'm going to go ahead and right click this and I'm going to duplicate it and create a second line. And let's say I throw it right around there, right under that level. We'll bring it down to 79.96. Okay. Right click it and set alert. Okay. So now you see alert me when Netflix crosses this line. Restart this alert when it triggers. You can click the next day, 1 hour later, 15 minutes later, 1 minute later. Monitor a maximum of 1 month. Actually, you can do it for the day if you're a day trader, but up to 2 years. And then you can also type in a description about why you created this alert. Okay, and then you can have different notification settings. Like you can have it texted to your phone, email. You can have a pop-up on your computer screen when something happens with this stock. So there's multiple ways to do it. All right, let me get rid of that because we don't really need that. So ServiceNow, another stock that is still dropping. This one here, unfortunately, let me see, are there any levels of support anywhere in the near future here? It looks like we broke through it, unfortunately. Okay, so this one was broken. They don't always hold up necessarily. That's the key thing to keep in mind. You want to always watch. So the low right there was 127.60. So let's go ahead and throw that in there, 127.6. We'll color it light blue because it's a weekly level. We're looking at a weekly chart right now. And let's see, last week on Friday, we closed under it by 30 cents. And then we're staying under it still. And the ADX is moving up. So now NOW is not looking particularly great. Now we didn't just close under that low, but if you look over here, we also closed under this low here too, right? With that candle. And it happened at high volume. And the ADX was moving up. And the negative DI was moving up. And the positive DI was moving down. And this is the order of negativity here. We don't want to see this at the same time. And look at the cloud is bearish. Single span A is under single span B. Tenkan-sen is under. The Kijun-sen, the green line, is under the red line. The Chiku span over here is dropping. And it's under price. Do you see what I'm talking about? What else do you see here? We have a lower high from the prior one and another lower high. We broke under this low. So we have a lower low now. So we are in a downward channel, okay? A lot of negative things going on with ServiceNow on the weekly. And if the weekly is bad, I wouldn't even consider it on the daily. I mean, look at it. It's a mess. So it's a company that is profitable, up 13.67% profits. Okay, sales growth is good. All of this can be true, and the stock can still be dropping for other reasons. Okay, and we don't really need to know what specific reasons they are. We can just look at the chart and say, okay, there's something off, there's something wrong. I'm not going to try to overanalyze the situation. I'm just going to, trust that the chart is accurate and true, which it is. Okay, unlike comments on news outlets necessarily that can, we're looking at the price, and the price doesn't lie, right? So it's the price of this stock right now for one share is $125.30, and you know what? Back over here, it was $239 back on January of 2025. Okay, about a year ago. It's dropped 47.83%, and it doesn't look like it's slowing down. So keep that in mind. Okay, OKTA. Now this one, on the other hand, is emerging above the cloud. So this is when things start to get more interesting. Price has dropped from these highs of 127. It's at 88.94. It's 30% cheaper than it was up here. Okay, for those of you who are looking for deals. But the thing is, it is currently under the Tenkan and Kijun on the daily. It's under the 200. And then you also have to confirm that the weekly is, on the weekly, it's still not there yet. But we've started to show a little bit of strength here on the daily. I wouldn't touch it. That's why it doesn't have a blue flag. But I'm just saying this is what you're looking for, is the emergence of the price through the cloud. XLK, remember the symmetrical triangle that we've been talking about for over a week now? It broke under yesterday with the bad news. Today, it's trying to recapture its spot back above the moving averages and above the cloud, because it did close above the cloud technically on the daily chart. But was the damage done? It was. There was some damage done here, and the ADX is moving up. Negative DI is still above the positive DI. It's going to take some more work here for this. And here's a weekly chart. Luckily, the weekly chart is still okay, has not closed under the Tenkan. All right, so that's a good sign. So we have some potential. All right, now we have some member stocks. Let's take a look at those real quick. It's a long video. See, when you enjoy doing what you do, then you just go, right? Oh, look at that on XLE. Now, I just saw that immediately on the weekly chart. I'm like, I did not already have that level there. So let's talk about this. Here's the high right there, 48.96. Okay, and it's a weekly level, and we just hit it. 48.75, and it retracted a little bit. Ooh, and if you go back a little further, there's some more levels right there. So they're around the same area, right? That one right there is a slightly higher. So there's two levels of resistance that it needs to break through. The 49.49 is what I would be waiting for. But on the weekly chart, all the elements of Ichimoku are correct, but this is an area that it's going to contend with. And here's the daily chart, also looking bullish. But again, whenever price comes to a level of resistance, you want to be a little bit cautious about entering into that specific ETF, because it's it's like a level it certainly needs to break through, and it's also kind of gotten far away from the moving averages here, the equilibrium zone. ON Semiconductor Corporation. Did I already talk about that earlier? Let me just double check. Was that one of the stocks that Kathy Woods? No. Okay, it was not. All right, so let's look at that. ON Semiconductor Corporation. That's an old level. Boom. Look at this right there. There's the high from July 22nd, 2025. The high was 63.63. Okay. I created that back on January 6, 2026. It's come right back to it. So it has not broken through. There's the daily chart. It's a weekly level. You can see it based on that prior level. What I like about ON Semiconductor is this is one of those stocks that has a lot of potential. Why do I say that? For a couple of reasons. One, we've developed a higher low here from the prior one. Okay. So we have an up channel that's starting to develop potentially once we break through that 63.63 level. We'll also be breaking through a pattern called the ascending triangle. All right, that's what that is. And if we break through the ascending triangle and we get above that 200, then on the weekly chart, then, you know, we're looking at much higher targets of about $111 at some point, which is about 43% away from where we currently are. So I like on semiconductor, I just want to wait. I would wait until we break above that level on the weekly, and on the daily. Yeah, I mean, that's the key thing. All right. Next, MU, Micron. I like this one on the daily chart. My members are picking some good ones, right? Micron, look at that. Nice ascending triangle that was broken. That was broken here on Friday, January 16th, and it's continuing to move up. It's moved up 10% since that break. If you're wondering if this type of strategy works or doesn't, I mean, it's evident here. You know, you see the consolidation, break, continuation to the upside, right? So MU, I like that one. Here's the weekly chart. I mean, it's a bit extended, but there's a lot of demand for it, and these moves can last. They can last for quite a while. In fact, since it broke above the cloud back here, Micron has moved up 208%. That was just in September, folks, of 2025. It's a big move for Micron. IJR looks good. That's the small cap 600. Okay, broke above that high there. It's moved up 3.5% almost. It's not moving. It doesn't move as much because it's a lower beta stock or ETF, sorry. And here's the weekly chart, also looking good. And it looks like it's more than likely, but we can't confirm it yet, that it's going to break and close above this high, the high of 128.61. If it does on Friday, then we will have a nice continued move to the upside, in my opinion. ICOP, whoa, look at this. iShares Copper and Metals Mining, multiple weeks, Tenkinson above Kijinson. Everything looks very bullish here. ADX, okay. See, this is like a double. Think of the directional movement index as your confirmation indicator. This is the primary and this is the secondary, right? Some people use this as a primary, and maybe they use the Ichimoku as a secondary. I think this should be the primary and this should be the secondary. But it looks good on the weekly, and here's the daily chart as well, up 1.87%. USO, United States Oil Fund. Wanted to know about oil. Well, here it is in the daily chart. It's interesting. This is an interesting chart because you can see the new formation of the bullish cloud here. The Senkou span A crossing above the Senkou span B. Price is above the 200-day moving average. Price is above the Tenkinson. The Tenkinson is above the Kijinson. And the Chikou span is also above price. So everything looks great on the daily. ADX is moving up. Positive DI is above negative DI. It would be better if the green line was moving up instead of like slightly down, but it's still very bullish. But what does the weekly chart tell us? Let's take a look. It's been moving up. So from this hammer type candle, it's moved up 11.1%, and it's entered the cloud, and it's looking more and more bullish each week. The only problem is it has not broken through the cloud yet. The Kijinson is going to be level of resistance there of 73.56 or so. The Tenkinson is still under Kijinson. The Chikou span is still under price. So the longer time frame is still not there. So you're taking a chance. It's a higher risk, in my opinion, of entering the position before everything clears. All right. If you're thinking about adding a position in USO specifically, there might be other stocks within this ETF that makes sense. And you can find those here when you open the component watch list, for example. Oops, my bad. But you can find out what stocks are within USO by also looking at FinViz. So let's go to FinViz for a moment. Type in USO. Scroll down and holdings breakdowns, 34, it says bonds, cash, and other. Commodities, metals, let's see. Typically, normally it would have the information right here. I'm just kind of curious. If I looked at a different ETF like XLE, yeah, see how it shows Exxon, Chevron. Okay, so maybe USO is not something I would use for identifying this, the energy stocks. Like I would look at XLE. Maybe that makes a little bit more sense. So you see Exxon, for example, looking pretty good. Chevron's looking good. Conoco looks okay. SLB looks really strong right there. Okay, Williams Cost. EOG, not so great. Valero, okay. Phillips 66 is okay. There's a nice one. KMI looks great. You can. What's cool about this specific software that I also utilize, the FinViz Elite, is that I can like look at a stock quickly and just like this one here, for example, the KMI. I like that quite a bit. Just looking at that chart, I know that it's going to look good if I pop it up here as well. So let's look at KMI for a moment, just for fun. Here's the weekly chart. Look at the cloud turning bullish. Price above the moving averages. Tenkan above Kijinsen. It's breaking above that old trend line. That's a really old one, so we're going to get rid of that. But Chiku Span is breaking above the price. So I like Kinder Morgan here on the weekly. Let's look at the daily chart. There it is. So if you've seen thousands and thousands of charts, folks, guess what? Eventually, it's like they just pop up in your brain and you can tell what looks good. This indicator just helps to make things a little bit more clear, but you saw that I was just like kind of screening through those other stocks that did not have the Ichimoku on there, but I was like, okay, I see that. I see the breakout, right? I see the higher low. That looks good to me. All right, and then there was one more. TE, which is T1 Energy Inc. It does have a negative profit margin, so we're going to look at the fundamentals of that one in a second. But the technicals, let's review the technicals first. On the weekly chart, it looks very bullish. It broke through the Ichimoku cloud. Now, at one point, this stock was as high as 1691. It broke down. That was back in 2022. And in 2024, just 2 years later, it was down 91%. Now, since these lows here, it's moved up 520. So it's a high-risk type stock, obviously. It broke through the cloud here, and it's up 220% once that happened. So we got the first bullish signs right there when it broke above the cloud. That happened around the $2.53 level. Here it is on the daily chart, also continuing to move up. It's going to be like more volatile. So you can see price breaking under and above the Tenkan more often as a result, okay, because it's a lower priced stock. Now, let's take a look at TE or T1 Energy and FinViz for a moment. Okay. Well, here are all the earnings announcements, right? So going back to March 17th of 2025, you can see that the EPS and EPS gap were negative. The earnings and revenue here, a surprise of negative 11.92%. Over here, things started to change here, and you saw that big move from that earnings announcement. Let's see what happened. Maybe it was a decline in the, so over here where there was a reported revenue of 64.64, and the surprise was a negative 11.92% drop. Over here, it was smaller. It was only a negative 5.09% drop of a surprise. So that small improvement could have led the price to move up. Over here, revenue became positive. So you can see how the revenue started to move up, right? And that's led to the move of the price up in the stock. Now, if we look down below, is this a company that I personally would invest in? No. Why? There's only 328 employees in this company. It's a 240, let me go back, sorry. It's a $1.92 billion market cap. It's in the Russell. Profit margins are negative 136.31. Let's see what are some of the positive things going on here. What do they do? I'm not even familiar with this company at all. T1 Energy engages in developing battery solutions. Okay, that's good. It focuses on the energy storage systems and commercial mobility. That's good. The company was founded by Tom Elner Jensen on August 31st, 2023, and is headquartered in Austin, Texas. See, the net margins are improving. No, not really. Okay. Anyway, they just something I would not personally be getting into. It's a little bit more of a high risk situation, and you can see the different how much the price jumps on specific dates. Like on August 20th, it was down 8%. Over here, it was down up 11, up 7, up 30%, down 10%, down 8%, down 9%. So it's just a lot of volatility because it's a lower priced stock. At some point, it will stabilize. But right now, it's not there yet. So personally, I would just stay out of that one. But that's, the technicals look good. Okay, and that's it, guys. That's going to do it. I think that was the last one. So thanks for watching. Don't forget to like. Don't forget to subscribe. And because we are trying to reach 28,000 subscribers. So it takes, we can get there. We can get there. The fact that we reached this level is pretty impressive, I think, and surprising. I'm just kind of shocked, honestly. It's kind of a surprise to me, but it's fun. I like the channel. It started as a hobby originally and turned it into something I think that a lot of people are enjoying, so that's good. Thanks for watching. Have a great rest of the night. I will catch you all in the next video.